Well, thank you everybody for taking your time to listen to some discussion about health insurance and the update on the Affordable Care Act. Okay. So the 2021 ARPA date update, they have expanded, they have not only expanded enrollment period, but they have also provided extra funding. So I'm going to show you what health insurance looks like at costs right now. It's one of the biggest budgets, I think, in most families' budgets. Farmers, ranchers, producers, I know it's a big budget item for them. And so this is a way we can help drive those costs down, and hopefully it'll end up looking something like this. Rather than that type of money going out the door, we can buy down your premiums with tax credits and possibly get you some cost share reductions to lower your out-of-pocket costs. So as part of the American Rescue Plan, they extended the eligibility for folks to get tax credits against their health insurance premiums. It now will go to people who earn over 400% of the instead of cutting out. So I'm going to show you some examples as we get a little further in the presentation. Those enrollment dates started on February 15th, 2021, and they're going to run until August 15th, 2021. People that already made a plan decision prior to January 1st, that started January 1st of 2021, are eligible now to look at that again and see if there's additional funding for tax credits to buy their premiums down. Also, there's people that don't have health insurance. They didn't make the deadline for enrollment. Those folks can apply now and get covered. It always starts the first date after the month of application. So anybody that would apply in April, their new plan date would start on May 1st. One of the things is if you've looked at it and you weren't eligible before, I encourage you now to take a look at the program again, because people who wouldn't qualify in the past based on income limits will now qualify for tax credits and cost share reductions. People are like, okay, Lance, how do we do this? It's simple. We just do a 5-minute review with your trusted Farmers Union agent, and we'll go over a few things, and I'm going to touch on that on the next few slides on what we look at. And during that 5-minute review, we're either going to be able to say, hey, good news, we can substantially lower your healthcare premiums, or you have the best option that you have. So what the Affordable Care Act looks for to figure out if you're eligible for these premium tax credits is it's called the MAGI. It's a modified adjusted gross income. For most people, it's identical to your adjusted gross income. So when your income starts here and you take all of your tax deductions, that bottom number is what they look at to qualify folks for the tax credits. Here's a couple bullet points on what they consider the difference between the modified adjusted gross income versus the adjusted gross income. Is excluded foreign income, non-taxable Social Security benefits, or supplemental security income, or tax exempt interest. Most folks this doesn't apply to, but we like to point it out on the difference between the MAGI and the adjusted gross income. And what we're finding are that the savings are real money to households, impactful dollars for folks. Here's an example of a male age 62 and a female age 60 with a household income of $125,000. Without a tax credit, they're paying $1,468 a month for their health insurance. Based on that income of $125,000, they're eligible for a tax credit to buy that premium down to $368 per month. Prior to this additional funding coming in April 1st, somebody at that age with that type of income was not eligible for a tax credit. I would say that people that were earning $60,000 or $70,000 as a husband and wife, 62 and 60, weren't eligible for any real tax credit dollars to buy those premiums down. Now that same set of folks, we're able to save them over $13,000 a year on the same health insurance plan they already own. You have to remember, these are your Blue Cross, your Sanford, your Medica health plans. We're just applying a tax credit to buy those premiums down. Another family we did, husband was 61, the wife was 60. They had a son who was 24, a daughter who was 22. Their current monthly premium was $2,100 a month. I don't have it on here, but that plan had a $5,000 deductible, 2 per family, so they had a little over around a $10,000 out-of-pocket cost. We did raise the deductible a little bit, ran it up to $6,900 for a $13,800 out-of-pocket, but we took their premium from $2,100 a month down to $0. That is their monthly premium for that plan based on their tax credit. I did run a second example on these folks. I don't have it on here. We looked at a lower deductible option of taking it down to about $1,750, adding some co-pays. So when they go see a doctor, they'd only pay $20. RXs were covered at $20 or $50. So they just made that small co-payment at the pharmacy. And that brought their premium from $2,100 a month down to just a little over $900 a month. So still $12,000 a year in premium savings and a better plan with lower out-of-pocket. I ran one today, a single, she was the daughter of one of our agents down here in South Dakota, 30 years old, didn't have health insurance. She made about $30,000 a year. We were able to enroll her in a plan this afternoon for a little under $80 a month so that she had quality health insurance. I'll have you bump that, Jessica. One of the questions that I get asked is, okay, so we can save money on our health insurance. We've got to go to maybe a different plan than we have now or a different company. You know, I've got some pre-existing conditions. What does that look like? Well, under the ACA, you cannot be denied for having any health conditions. They can't charge you any more money for having health conditions, and they can't not cover those health conditions. Once you're covered by a plan, they have to cover you as you were covered before. Pre-existing conditions have immediate coverage on these ACA plans. As a matter of fact, if somebody was pregnant, they would be covered immediately for that as well. If you have heart conditions, cancer, it's all covered immediately. There's no pre-X and there's no waiting periods on these Affordable Care Act plans. Again, the special enrollment runs from, it started back in February on the 15th, and it's going to run until August 15th, 2021. I would encourage you not to wait. I would encourage you to contact your local farmers union agent. If you're eligible for savings, take advantage of that as soon as possible and let that savings add up as you go throughout the year rather than paying that high monthly premium. I wanted to keep this short and to the point. I know folks are busy, so this is my contact information. If you don't have a local farmers union agent, if you do, contact them or feel free to contact me. We'll work right through them. And with that, I would open it up to any questions. All right, I'm just going to hit a couple of the bullet points again. The extra funding came in on April 1st. So even if you had someone look at your plan prior to April 1st, look at it again. It's different. The tax credit amounts are higher. People that were ineligible prior to that are now eligible. You may possibly even get a cost share reduction, which will buy down your deductibles and out-of-pockets. The plans are guaranteed issue. There is no underwriting. There's no health questions. If we keep you within the same company, let's say you have a Blue Cross plan, we can enroll you right back in that same Blue Cross plan and just lower your premium. And even though you have a new plan start date, any money you spent towards your out-of-pocket cost will transfer to the new plan as long as we keep you with the same carrier and the same plan levels. This runs until the 15th of August. I would encourage you to reach out sooner than that to your trusted farmers union agent, see if we can bring down those healthcare costs for you.
Lance, how long is that new plan good for? Do you have to have it looked at every year, or is it locked in for a while?
You want to do your plan every year because you have to make an income estimate every year. So that's what they base it on, is your estimated income for the upcoming year. As far as the additional funding to buy these tax credits, the premiums down even further, that is funded until the end of 2022. So even if that funding wasn't there, there's still what was there prior to April 1st, and you would have, instead of say a $200 premium, you might have a $400 or $500 or $600 premium, but you still would receive the tax credit at those income levels. Hey, Pam, thank you. All right, I know it's late. I appreciate everyone's time. If there's something offline, I can't stress enough about just taking 5 minutes and letting one of our agents review your situation. And the worst thing that can happen is you already have what you have and you have to continue with that. Or in the case of some of these folks, we're saving them $10,000, $20,000, $30,000 a year in premium, which is substantial money. I can tell you, I have a couple of teenagers. I would rather put that money towards their college than give it to Blue Cross and Blue Shield or Sanford. I like those guys at both of those carriers, but health insurance is a big budget item. If we can help you lower that, that's what we're here for. So with that, there's my contact info is out there. Contact your local Farmers Union agent. Again, everyone, thank you for your time this evening.